But unfortunately, what we've seen since the late summer is that the market predictions have started to creep up again, that the base rate will be held higher for longer by the Bank of England because of stubborn inflation. So I'm going to tell you where the market thinks the Bank of England base rate will be over the next 5 years. And it's not all good news. So there's an article on the Money to the Masses website, which I'm going to run through quickly. There's a link to it in the notes of this video because we update it regularly with the latest predictions. So bookmark it and you can refer back to it in the future at your own leisure. So here's the article on screen where I look at what the market is predicting will happen to the Bank of England base rate in the future. Now, at the top, there's a simple summary table that shows you that the current Bank of England base rate is 4%, but the market doesn't think the base rate will necessarily be cut again before the end of 2025. So its prediction is roughly for the base rate to be around 3.9% at the beginning of 2026. Now, don't forget the Bank of England typically cuts by 0.25% increments. So these are just using swap rates to estimate what the base rate could be in the future. It doesn't actually think it will be 3.9%, but it gives you a hint that it might be lower than 4%, but the chances are it probably won't. Realistically, the market thinks we might get another base rate cut in the spring of 2026. So by early 2027 there, you can see in the table, the market predicts that the Bank of England base rate will be 3.63% there or thereabouts. So that means one or two more base rate cuts over the next year or so. But then the market does predict that the base rate will start to increase again back towards 4%. But what's important is you need to put these predictions in the historical context of other predictions from the past. Now, at the foot of this article is actually a link to an article on remortgaging. Now, I'm sharing that article on screen. Again, there'll be a link in the notes of this video if you want to read it at your own leisure, which talks about whether now is a good time to fix or not. If you jump down to the middle of that article, you can see there's a chart which shows the past predictions of where the market was predicting the base rate would be over the next 5 years. Now, if I zoom in on that chart so you can see it more clearly, you can see that the predictions of where the market thought the base rate would be over the next 5 years have changed a lot. So each line represents where the market was thinking the base rate would be over the next 5 years based upon the information they had at that date. So the blue line was the prediction made in September 2024. The green line is the current prediction, and the other colours are predictions made in between those two dates. If you focus on the blue line for a second, you can see that the market predicted that the base rate would actually stay just above 3% over the next 5 years. So it was a very optimistic outlook. Then if you go on to January, the market panicked and thought the base rate would be stuck above 4% for all of the next 5 years. And that was because of concerns about inflation. But then as the year progressed through March and into August, we saw the predictions of the base rate falling of where it would be over the next 5 years. So it was more optimistic. They thought the Bank of England would be able to start cutting the base rate, which would be good news for mortgage holders. But unfortunately, what we've seen since the late summer is that the market predictions have started to creep up again, that the base rate will be held higher for longer by the Bank of England because of stubborn inflation. So the Bank of England tends to cut rates when inflation is under control. It tends to increase the base rate when inflation is higher than its 2% target rate, which it currently is. So the market now, if you look at that October prediction, which is the green line, is higher than the August prediction. And it's predicting that the base rate might dip a little bit into the early part of next year, as I've already mentioned, but then we'll get back to that 4% level within the next few years and be there in 2030. So that's not great news for mortgage borrowers. There's a little bit more positive news if you're a saver, of course. So for mortgage borrowers, if the base rate does stay higher for longer, that does tend to hint that mortgage rates will be higher as well. So it's not good news if you're going to be looking to remortgage or buy property in the next few months. Now, what does that mean for mortgage rates? On screen is another article, The Best Mortgage Rates in the UK. I'll put a link to this in the notes of this video as well. But what we're seeing is 2-year fixed rates are between 3.8% and 4.2%, depending on your loan to value. If you have a loan to value of only 60%, then you will get the better rates. And that's 3.8% at the moment. But mortgage rates are starting to creep up ever so slightly as the market becomes less optimistic about the base rate being cut by the Bank of England in the future. 5-year fixes, we're looking at about 3.96 for the best deals for those people with the lowest loan to values, and 4.19% for people who have a 90% loan to value. There are 10-year fixes, of course. I won't dwell on those. If you're looking at trackers, then trackers are 4.11% on the 2-year tracker, which is the best rate you get at the moment. And that's just above, of course, the 4% Bank of England base rate. 5-year trackers, you can get 4.6%, as you can see on screen. I'll put a link to this article because we do deal with first-time buyer mortgages as well. So these are ones where you have a 95% loan to value. And we do, of course, look at best buy-to-let mortgages as well. So overall, not great news for mortgage borrowers. More positive news for savers, of course, because if interest rates stay higher, it does tend to mean that savings accounts interest rates stay higher if the Bank of England keeps that base rate higher for longer. If you found this useful, do hit that like button, but also subscribe to the channel.